Hi you all. So today I'm just done reading a news about our economy. So I'm interested to share with you guys about what actually happened in our economic from 2020 to 2025. Here's the data for Malaysia monthly total trade by year 2020 to 2025. Based on data given in January 2020, Malaysia total trade was RM 156.2 billion, marking a 2% decline from the prior year. Export dropped by 1.5% to 84.1 billion ringgit, while our import fell by 2.4%, but yet trade was still in surplus. Beginning in 2021, Malaysia trade story enters a strong upswing, with exports skyrocketing and imports are increasing. It's reflecting a nation's rebounding global demand and revitalized productions. However, by late 2022, the landscape shifts as the export surge slow, while import continue their steady rise. The trade balance remains, but its margin tight. This period is influenced by global market and certainly economic winds and rising energy costs. It's reflecting Malaysia adjusting to the evolving global economy rhythm. By 2023, the momentum began to fade. Global inflation, rising interest rates, and political tensions around the world started to weigh on Malaysia's trade. Malaysia's total trade fell by 7.3%, dropping to 2.6 trillion ringgit, as both exports and import declined. By the way, the trade surplus also narrowed by 16%, which means reaching 215.2 billion ringgit. By 2024 and 2025, Malaysia's trade performance becomes more stable and start rising again. Both exports and imports increase, with exports still ahead, keeping the trade surplus positive but less extreme than in 2022. Based on the rising trend in trade up to mid-2025, the fourth quarter would likely see export and imports increasing a bit more. Exports should still stay higher than imports, keeping a moderate trade surplus. It will be similar to early 2025 without a major surge or drop. The reason why I said the economy will increase is the trade between Malaysia and US actually very profitable because US is our biggest export market, especially like the E&E product and semiconductor product. Not only that, Nvidia has powered data center in Johor previously, which means Malaysia will become a giant hub of AI on Asia in the future. This chart shows domestic export and re-export from 2020 to 2025. The blue bars are domestic export and the red line is the re-export. To compare these both offline, domestic exports are much bigger and grow faster. Then re-export are smaller and grow more slowly. So domestic export are the main driver or export growth, while the re-export play a smaller supporting role. Looking at the upward trend in the both export and re-export up to mid-2025, I expect the fourth quarter of 2025 to continue with strong growth and a stable rise in final quarter. Re-export, on the other hand, also following steady upward with low volatile. In short, domestic export are sprinting toward a strong finish, while re-export cruise steadily forward. For the next, we also know that Malaysia's imports are driven mainly by production, not a consumption. Immediate goods like raw materials, lead the way, showing strong growth, especially from 2023 to 2025. This reflects our active manufacturing sectors. In the other hand, capital goods, for example, machinery and equipment, are rising steadily, showing ongoing investment in production. To consumption goods remain flat, with a minimal change over the years. In short, Malaysia's import pattern shows industrial strength with factories fueling demand more than household. Overall, Malaysia's Quarter 4 2025 import outlook is production driven, with intermediate goods leading the charge. Capital goods may rise modestly, while consumption goods stay stable with a festive bump. For next, Malaysia's top import in 2025 is electrical and electronics, around 400 billion ringgit. This support our tech and manufacturing industries. Next, machinery, petroleum and chemicals. All of this is a key for powering factories and industrial growth. Import like transport equipment, iron and steel, and optical goods also play a role, but at a smaller level. Overall, Malaysia's Quarter 4 2025 import profile will remain production focused, led by electrical components, machinery, and petroleum. We're importing to build, not just to buy. Alright, let's begin. Malaysia's 2025 export profile is technology and resource driven. Electrical and electronics dominate, reinforcing Malaysia's role in global supply chains. Petroleum and palm oil remain strategic, while machinery and chemicals show industrial depth. These sectors not only boost trade but also shape GDP through manufacturing, agriculture, and energy. Next, Malaysia's top export markets in 2025 are Singapore, the United States, and China. Together, they make up nearly 60% of our total export. Singapore leads with over 22%, followed by the US at 20% and China at 16%. This strong trade ties shape our policies. We focus on fast logistics with Singapore, high product standards for the US, and regional agreements with China. In 2025, Malaysia's top import partner is China, with nearly 250 billion ringgit in goods, mostly electronic and machinery. Next are Singapore, Taiwan, and United States, each supplying over 100 billion ringgit, including fuel, chemicals, and high-tech equipment. Other key sources include Japan, Indonesia, and Korea, supporting our transport and industrial sectors. This import help power Malaysia's factories, build infrastructure, and keep our economy competitive. In 2024, Penang leads Malaysia's export with nearly 495 billion ringgit thanks to its strong electronics industry. Johor comes next with 306 billion ringgit driven by petroleum and machinery, and Selangor ranks third at 265 billion ringgit with diverse export from transport to chemicals. From January to September 2025, Malaysia's exported around 340 billion ringgit to ASEAN countries and imported about 230 billion ringgit. That means we had a trade surplus of over 100 billion ringgit. Most exports were electrical goods, palm oil, and machinery. Imports included raw materials and transport equipment. This strong trade shows how Malaysia benefits from ASEAN's free trade deals with lower tariffs, faster customs, and better regional connection.